Hey guys, another wild morning. Today we woke up and the futures are up, 1,000 points. No surprise, I guess, right? We're expecting things to get kind of wild. But there was news about, possible, 10% across the board tariffs. There was room for negotiation. There was room for, a bunch of stuff that we were expecting anyways. We're expecting everybody to come to the table and talk about, where these trade agreements are going to go. Big outlier is still China. So China, they're talking 50% retaliatory tariffs, and that would be very bad news for the tech sector, to say the least. So especially for Apple. Apple's got big infrastructure problems when it comes to China and trying to move things away from China. So that's going to plague the markets for a while, all the China news. But I think that the rest of this stuff today is an opportunity for bi-directional trading. You can get trades on the upside, trades on the downside. We've been focused on the short side of the market just because of some very steady trading, some very surprising trading right out of the gate here. And we had Nucor this morning, made for a nice trade. We had some of the opening gap trades in Dave & Buster's, for instance, play. That was a really good setup. And, I would have expected more volatility than we saw, so things settled in pretty quickly and actually gave us the opportunity for some very orderly trading and the opportunity to get right in front of the opportunities for profit. So let's take a look at the charts and see what we're looking at for the rest of the day. So at least for the next couple hours, I think the focus here is going to be on, we saw the pop higher. And, just like with any exaggerated move, what you're really looking for is where's the threshold? Where's this thing likely going to push to, and then where's the push back going to be? And you can see that we got right up into, on a daily chart here in the bottom left, that 442 sort of 50 mark. That was where the intraday chart ran into, at least on the triple Qs and on our indices, ran into overhead resistance. So that really gave us the opportunity for some short side trading on just about everything. So Apple, our first trade on Apple was a long this morning, and the move down into 185.38, we had that marked. We had 184.57 and 185.38 marked, and we were looking for an inflection there that would push it higher, and in fact got up into 187.41. So I actually missed that trade. A couple guys in the room got it. So I was looking for the lower inflection. I was looking for the move off the lower band. But it doesn't matter. The opportunity was there. A bunch of people grabbed it, and that's good stuff. I was focusing on some of the opening gap trades. I can show you, for instance, over on this chart over here, we have got Nucor. Now, Nucor was not a 2SD opening gap, but it gave us plenty of opportunity anyways. It was on the list. One of our friends, John Polaro in the War Room, gave us the setup, and it really put us in position for a nice reversal trade off of this blue pivot. So when it got up into R1, the heads up was, I said, let's watch for an entry and see if we can get a 109.50 entry with a 108.10 target. Hooray, $1.40 per share, and then this thing traded right on down into yesterday's support resistance 106.14. So boo, another $2 after we got out of the position, but that's okay. What we're looking for is plan the trade, trade the plan, and the plan was certainly to get out at that threshold level, that 108.10 level from this morning. That came from right in here. And that was enough for me. So I just wanted to make sure that I had the trade set up properly and that I knew where I was looking for it to go, and just anticipate the anticipator, so to speak. The rest of this stuff has been really based on those threshold levels that I was talking about earlier in your futures. So in the triple Qs and the futures, we see that that bump against yesterday's overhead resistance and the prior session's overhead resistance really reversed things and gave us the opportunity on, a bunch of these. Amazon, Amazon was a good one that's up here, but it's not as easy to spot as, what's going on in some of these other names. So on Google, we had a really picture-perfect move from that overhead resistance line on down. So you could really anticipate this move from 154.15 down into the 153.13 level there. And then the rest of it was just gravy. Having this 151.64 move, you know, on all of these stocks, this further leg lower from our anticipated entry and our anticipated profit target. Those are great to have if you could get them, but really the thing to do is just pat yourself on the back for, you know, grabbing the inflections when they're right in front of you, because, you know, you don't want to get into the coulda, woulda, shoulda stuff, and what you really want to do is focus on what you should do before it happens, right? Not what you should have done after it happens. So, you know, once again, right now we've got Microsoft. So this is sort of the game plan going into the rest of the session. I'm going to look for these kind of moves, right, that come back up and hit that anchored VWAP, 368.87, and the target on that 367.59. We'll look for another anchored VWAP if we get another move lower. On NVIDIA, same thing. So you're looking at a move that gets you up into this blue pivot. But where's the blue pivot? It has confluence with your anchored volume weighted average price and with your cluster analysis of volume by price. So when it got up there and hit that threshold level, you know, you've got an entry either from 104, where you're looking at this move higher and then back down again. So you could go 104 down to 102.53 or 103.57 on a violation of that, you know, of this line that you drew, which is just below that anchored volume weighted average price. That gets you down, gets you right in front of the profit opportunity, and, you know, there's no second guessing, there's no, you know, trying to think through things after they happen. You know exactly what you're going to do before you do it. Infield fly on Tesla. So Tesla had an infield fly. I was just saying to Julie this morning, the one thing we cannot miss in this market is an infield fly setup. So if you look at, and that's from Around the Horn, right? You guys who are Around the Horn fans, I wrote that book, Jesus, it must be 30 years ago almost now, and these patterns are still absolutely the same game changers that they were then. So Google and Tesla had infield fly setups. The Tesla setup's the one that I want to focus on because, you know, Tesla's one of my favorites, and you know, sad to say Google really isn't, although it probably should be because it's a nice trading stock. It's a very steady trader. But if you look at Tesla, 246.01 was the infield fly setup. Once it triggered, it never moved above that threshold level again, and it just comes right down and hits our profit objective, 243.77. So you got, you know, $2.30 per share traded of profitability on that just for sitting there and waiting for the thing to happen that we wait for every single day. And, you know, it happened on the triple Qs right around the same time. You know, you can see right here you have this move, infield fly move, right from 437.29 down to 434. This is the kind of thing that can, you know, really make the difference between a good day and a great day. Is just sit, wait for the opportunities to pop up right in front of you, and when they do, you know, put yourself in front of the opportunity. Have the order sitting there, have it ready to go. Use a stop limit order to get you into the position. That way you're not having to futz around with the keyboard and the mouse and everything trying to get things in order. And you know, when they come together, they really tend to come together in a great way. All right, so that's it. I mean, there's been lots of profitability this morning. I think there's lots of opportunity for profits going into the afternoon. I've got to run out for a minute here, so if you guys are in the war room with us, I sadly have to run to the dentist and get a crown put back in. But you know, that's besides the point. That's just another story. But you know, let's stay focused on these things. Stay in front of them. If they come up to the bands, look for the moves back down into the range. Look at what the trend is. Don't lose sight of the trend. If we get a big market reversal, don't try to fade it. Just try to stay with the game plan, right? As long as we're below the trend line for the session, let's just look for moves back up into the anchored VWAPs, back up into the volume weighted average price for the session, and look at those as opportunities to get back down into the range. And if we start trending higher, same thing. Look for moves down to the volume weighted average price from above. Look for those things to be confluent with the volatility bands, with the anchored volume weighted average price, and with the volume by price data, and you should be good to go for the afternoon. All right, have a great trading day, and I will see everybody right back here tomorrow.